Regeneron, I mean, they absolutely smashed Q2 2026 consensus. Revenue hit $4.29 billion. That is a 17% year-over-year jump that easily cleared the $3.82 billion estimate. And non-GAAP EPS came in at $14.29, which just totally crushed the 10.16 consensus.
Yeah, and management leaned right into that momentum, too. They raised non-GAAP gross margin guidance to like 84 to 85% and actually trimmed capital expenditures.
Yeah.
And the stock reacted exactly how you'd expect. It popped 6.17% on earnings day. That sparked this 6-day, 13% rally that added $9 billion to their market cap.
Okay, so looking at the earnings reports and analyst notes we have as sources today, our mission for this deep dive is to figure out what's really driving those massive numbers. Like, are we seeing a permanent structural shift in profitability here, or is this influx of cash just, a temporary bandage over a cracking COG pipeline?
Well, to answer that, we really have to look at the main engine this quarter, which is Dupixent. I mean, it posted this massive 38% global growth, hitting $6 billion.
$6 billion. Well,
Yeah, but the headline revenue isn't even the real story here.
yeah.
The real story is what is structurally happening to their profit margins heading into the second half of the year.
Right, which brings us to the Sanofi development balance. So looking at the notes, I'm trying to wrap my head around this. Is fully paying off this legacy obligation essentially like Regeneron finally burning the mortgage on a collaborative house, like instantly unlocking pure cash flow?
That is exactly what it's like, yeah. Great analogy. The Sanofi balance is now fully repaid as of the end of Q2. So that eliminates a huge accounting drag for them.
Oh, so they aren't using any more revenue to service that old debt.
Exactly.
Yeah.
And mechanically, paying that off triggers a contractual step-up in what's called unreduced profit sharing. And that starts right in Q3.
Right.
So basically, they no longer have to forfeit a percentage of those Dupixent profits back to Sanofi. They finally get their full cut.
Okay, so getting their full cut definitely secures their cash floor. But while that flank is secure, their actual market dominance is being actively attacked on a completely different front. I mean, eye care.
Yes, the EYLEA franchise. Now, on paper, it looks like a successful passing of the torch. U.S. sales for their new EYLEA HD hit $596 million.
Which is huge.
Right, which means it officially eclipsed the older legacy EYLEA product, which sat at $412 million for the very first time.
I do have to push back on calling that a total win, though.
Really? How so?
Well, if you look at the deeper financials in your notes, the combined U.S. EYLEA franchise sales actually fell. They fell 12% year over year, down to $1.008 billion. I mean, is Regeneron just frantically plugging holes in a sinking ship as competitors erode their market share?
I wouldn't call it a sinking ship just yet, but the leak is very real. The biosimilar pressure is fierce.
Cheaper generic versions, right?
Exactly. Cheaper versions of their legacy drug, that old product is eroding much faster than the new high-dose version can actually backfill the lost revenue.
And I feel like that pressure makes the underlying cracks in their oncology pipeline look even more alarming. The notes highlighted a pretty severe setback with the phase 3 fianlimab melanoma trial.
Yeah, this is the glaring vulnerability in their whole growth story. The trial failed its progression-free survival endpoint.
Oh, wow. So in plain English, it couldn't prove it stops the cancer from spreading longer than existing treatments.
Precisely. And that oncology setback instantly erased billions in projected future margins.
Yeah.
Analysts had heavily factored that drug into Regeneron's future valuation, so when the trial failed, those forecasts just vanished overnight.
That is brutal.
It is. Plus, it triggered active class action securities litigation. Investors are claiming management completely misled them about the trial's viability.
Okay, so balancing this flood of new cash with some serious structural leaks, I want to leave you with a final provocative thought.
Let's hear it.
Regeneron is now sitting on an eye-watering $15.1 billion in cash. With that Sanofi debt finally cleared out, will they be forced to deploy that huge war chest for aggressive M&A just to patch up their broken oncology pipeline?
That is definitely the multi-billion-dollar question moving forward. Thanks for joining us for this deep dive into your sources. And make sure to follow the show for daily earnings coverage.